Good morning to all traders and welcome to this Thursday's market insights video. It is the 7th of January. We've had the two Georgia round of election wins yesterday from Democrats. Actually, we just got a blue sweep that was not really expected back in November, to be honest, turning sour after Trump addressed his followers on Twitter. Somehow risky, I would say. And as a result, they stormed into Capitol Hill in an attempt to interrupt what Trump called back in November as well, a smooth transition, a smooth transfer on power. Now, the violent attack march caused one death. It led to many people being injured and over 50 people also being arrested, mainly as the far-right groups, the protesters marched into the Capitol Hill, aggressive and violently, coming into, even turning into a ring with the police, against the police officers. Right 90 minutes after the tweet of President Trump. Now, following this, the Twitter suspended his account, of course, to avoid any further risks of violence. Facebook as well as Instagram followed suit by removing a video that was again addressed to protesters. Now, when it comes to the civil unrest, one would expect gold markets to rise. However, that was not the case as a blue sweep. Now, Congress, led by full Democratic leadership, means that we're going to see bigger packages in terms of COVID stimulus, and we're going to see bigger sums of money spent for infrastructure, as Biden has pledged, as we know that already, of course. So the safe haven was ignored. In fact, they were shifted. Some gains were shifted from the gold on profit taking, of course, yes, and were shifted to the into the equities and other risk assets, including the Aussie and also oil, of course, WTI. For that reason. Now, of course, the expectation for inflation in the future going down the line might change that, but for now, we remain optimistic in the equities markets and for high beta assets. Since the gold was actually pushed lower and the oil was pushed higher on risk appetite, and that was also supported by a huge inventory draw that was reported by the EIA, right? So we're going to have a quick look on gold, oil, silver, and natural gas for today, okay? I will start with gold. I'm not sure I like this as an impulse, but it could be a case where this is wave 1 and 2, and this is a multi-structural wave to the upside, wave 3, right? So it looks like we ended since we've penetrated the previous high, right? Despite the fact it's a triangle. It looks like we ended wave 3 at the 127 extension of wave 1, yeah? So I'm expecting now a correction and down again for wave 4. I don't want to cross below the 1877. In case we go below 1877, then most likely this is going to be an X, and we're going to have another move to the downside for wave Z, and this is when we're going to complete wave 4. Now, if the 187 holds, then most likely this is the case of the one I'm explaining now. We're going to see another move to the upside for wave 5 near the 200 Fibonacci extension, around the 2000 mark, just probably above, creating a false break initially. Then we're going to move down for intermediate wave 2 because it's going to be intermediate wave 1. Yeah. Oh, I'm sorry. I should have gone one degree lower. There would be a minor one, right? So I'm expecting minor 2, then 3, 4, and 5 for further upside in wave 5. Now, when it comes to the silver, we have something similar here. But don't forget on silver, I've been waiting for another move to the downside for a while now because we haven't seen a fresh low. Okay, we've seen an A, B, and we'll call this a C. This is 1, 2, 3, 4, and it looks like we're going for an ending diagonal over here. Yeah. Once we finish this, I'm expecting another move to the downside. Okay, and that move is ideally we want that to create a fresh low as we expected for a while now. Now it will be a case where this can turn because we've got an ABC and an ABC. Yeah, if we go a little bit higher, it would be a case where this can also turn as an ABC, as a flat, right? It could be also a case where we'll break above this high. We'll reach the 38 point of Fibonacci of wave A, yeah? So we can go up to 33, right? And then drop in a 5-wave move in wave Y. And most likely it's going to be an expanded flat, of course. But it's not going to go below the wave 1, right? So it's going to be expanded, but not to the full extent of 168.2. So this is what I'm looking here as well. Now, jumping on oil quickly. Well, you know that I'm bearish in the medium term, yeah? Because this is wave 4 and I'm expecting another dive on the way, all the way down. Now, looking at this structure over here, this for me is 1, 2. We've got 1, 2, 3, 4, 5 again, and the diagonal 3, 4, and I'm expecting another move to the upside around the 53.73, which is the 61.8 Fibonacci extension of waves 3 and 4, to get wave A done. Yeah, and from there I'm expecting a pullback, a correction down to wave B, then C, and then all the way down, right? So it could be a case, of course, where this turns out to be 1, 2, 3, 4, and 5, and under any diagonal also, okay? Or it could be a case where this is ABC, ABC, I'm gonna see 1, 2, 3, 4, and 5 for wave 4 over here as an expanded flat or even running flat, okay? In either case, I would be expecting to see whether the upside continues to the 53 or not, okay? In either case, up here, I think I will be looking for some sort of validation to make some good sell trades. Now, natural gas is looking quite good down at the 61.8 Fibonacci extension retracement. Do not forget this is 1 and 2 with the W, X, and Y we called ages ago. This looks impulsive, okay? So we'll continue higher, we'll get 1, we go for a pullback down into and continue all the way up. This is what I'm looking at the moment. Multi-structure move, yes, on the upside, with potential to upside, of course, in the longer term being quite high. Now, it could be a case, despite the fact that we did break outside this trend line, it could be a case where this test is going to be something like that, you know, come down here in wave 2 and then move all the way up. But it could be a case where we re-enter the channel, okay? If that happens, then most likely we're going down to 195, and this is going to be a triple zigzag. So we're going to have X and also a Z. And the wave 1 is the minimum we can get down to, okay? Because this is the high of wave 1. If we break below that level, then it means we're not impulsive.